The moment the market starts moving fast, something shifts inside you. Your attention sharpens, your breathing tightens, your heartbeat picks up its pace, and suddenly, the chart doesn't look like data anymore. It looks like opportunity escaping your hands. This is where FOMO begins, not on the chart, but inside your mind. Every trader knows the feeling. A breakout candle shoots up, and your brain reacts instantly. You're not thinking, is this a setup? You're thinking, what if I miss this? That's the moment when emotional trading takes control. FOMO doesn't start with the move. It starts with the fear of imagined regret. Your mind shows you a future where the market runs without you, where others win what you didn't take, where hesitation becomes loss. And before you even realize it, you've entered early, entered late, or entered blindly, committing one of the 5 big FOMO mistakes traders make every day. Maybe you chase hype. Maybe you jump in because everyone else is trading it. Maybe you exit too early because the candle pulled back for 2 seconds. Maybe you break your rules because the move feels too good. These aren't random errors. They're predictable emotional patterns. And if you don't understand where they come from, they'll keep repeating. In every market, on every time frame. But the fact that you're here means you're ready to break out of that cycle. You're ready to trade from clarity, not panic. You're ready to learn the 5 mistakes most traders make and the exact steps to avoid them. If you want to escape emotional trading and build a calm, confident mindset, subscribe to the Trader's Mindset. Your upgrade begins now. Let's break down why traders fall into these FOMO traps long before they ever click the buy button. Before you ever make a FOMO mistake, something subtle happens inside your mind. It's quiet, invisible, almost unnoticeable. But it's powerful enough to control your decisions without asking for permission. This is the psychology most traders never recognize, the hidden triggers behind emotional trading. Every FOMO mistake starts with anticipation, not action. Your brain scans the chart, not for patterns, but for possibility. You start imagining what could happen instead of what is happening. That imagined scenario is the first trap. Then comes social pressure. Seeing others win, hearing the hype, watching a ticker fly on social media. Your brain interprets this as everyone is getting ahead of me. Even though the chart hasn't confirmed anything, your emotions already have. Another powerful trigger is uncertainty discomfort. Your brain hates waiting. It hates not knowing. It hates sitting on the sidelines while the market moves. So when price accelerates, uncertainty transforms into urgency, and urgency becomes FOMO. Biologically, this reaction is completely normal. Your system is designed to avoid regret, not analyze candlestick structure. Missing out feels like danger. Losing potential profit feels like a threat. That's why your chest tightens, your jaw locks, your breathing changes. Your body is preparing for action, and that's where the cycle becomes visible. You hesitate. You fear being left behind. You chase. You break your plan. You repeat the same mistake. In this phase, your goal isn't to fix FOMO, it's to see it. Awareness is the first weapon. Recognition breaks the emotional autopilot. When you notice the trigger, you weaken its power. Now let's explore the inner conflict that happens when your strategy says wait, but your emotions say enter now. There's a moment in trading where your strategy and your emotions collide. It's silent but intense. Your mind knows the rules. Wait for confirmation, trust the setup, avoid impulsive entries. But your emotions, they don't care about rules. They care about urgency, excitement, and the fear of being left behind. This creates your deepest internal battle. Logic says wait, emotion says now. In this conflict, your brain launches 2 powerful forces. 1, impulse. The part of your mind that wants immediate reward. It sees a candle move fast and assumes opportunity is slipping away. 2, bias. Confirmation bias, hindsight bias, optimism bias, all whispering, This one will work. Don't miss it. And this is where the 5 big FOMO mistakes begin. Not on the chart, but inside your internal dialogue. You watch the chart and think, what if this is the move I've been waiting for? What if everyone else is catching this except me? What if I miss another winner? These what-if loops pressure you into clicking buy earlier than planned, chasing a move that isn't confirmed, or abandoning your rules just to avoid regret. You're not trading the market, you're trading your fear. But here's the powerful shift. The moment you see this internal conflict, you gain control over it. Self-observation breaks emotional momentum. If you're ready to stop emotional entries and finally trade with calm, confident logic, make sure you subscribe to the Trader's Mindset. This channel is built for traders who want mastery, not chaos. Now let's break down how the market itself manipulates your emotions and why it makes you believe opportunities are disappearing when they're not. Most traders believe FOMO comes from inside them. But the truth is, the market plays a huge role in creating it. Every sharp candle, every sudden spike, every fake breakout, they're all signals designed to pull emotional traders into dangerous decisions. The market doesn't just move, it manipulates perception. Every market cycle creates illusions. A strong green candle makes you imagine strength. A sudden breakout makes you imagine continuation. A small pullback makes you imagine missing the move if you wait. These illusions are intentional. They're built into price behavior. Smart money knows exactly how beginners react. They know when retail traders chase. They know when fear peaks. They know when urgency is at its highest. That's why you often see breakouts that fail, spikes that reverse instantly, perfect setups that trap emotional entries. These patterns aren't coincidences. They're liquidity traps. And FOMO is the fuel that makes traders fall into them. When you react emotionally, you're not trading your strategy. You're trading the narrative the market is showing you. A narrative designed to push you into the wrong decision at the wrong time. To break this cycle, you must learn to see the difference between movement and manipulation. A candle moving fast doesn't mean strength. A breakout doesn't mean continuation. A dip doesn't mean opportunity. You must train your eyes to see structure, not speed. You must learn to wait for confirmation instead of chasing excitement. You must understand the psychology behind price, not just the pattern it forms. Up next, let's reset your emotional system. So the next time you face a FOMO trigger, your mind stays calm, centered, and in control. Every trader knows the feeling that comes after a FOMO mistake. That slow, sinking pressure in your chest, the frustration in your mind, the voice telling you, you messed up again. But here's the truth, most beginners never understand. What happens after the mistake matters more than the mistake itself. When you react emotionally to a loss or a bad entry, your nervous system shifts into survival mode. Your breathing becomes shallow, your shoulders tighten, your thoughts speed up. You begin replaying the moment you entered too early, or too late, or without confirmation. You judge yourself. You get angry. And this emotional turbulence becomes the real danger, because it sets you up for the next mistake. This phase is about breaking that cycle. It's about learning the skill most profitable traders master first, resetting your emotional state before the next decision. To reset, you must interrupt the psychological spiral. Pause. Exhale slowly. Relax your shoulders. Look away from the screen for a moment. Let your mind recenter. When your breathing slows, the brain shifts back into clarity mode. Your decision-making becomes logical again. The urgency fades, the regret dissolves, and the FOMO chain breaks. Next, acknowledge the mistake without emotional weight. Yes, I reacted, but now I'm resetting. This builds awareness, not guilt. Then reconnect to your plan. Look at your rules. Look at your setups. Look at your conditions. You're not fixing the past. You're protecting the future. Professional traders don't avoid emotional moments. They recover from them fast. They treat each reset like a mental reboot. That's how they stay patient. That's how they stay consistent. Now that your emotional system is reset, it's time to shift your entire approach from reactive to strategic and stop FOMO before it even begins. Once you've reset your emotions, the next step is transforming the way you approach every trade. Because FOMO isn't just an emotional reaction, it's a habit, a pattern, a mental shortcut your brain takes when it wants certainty right now. To escape this cycle permanently, you must shift from emotional trading to strategic trading. This shift begins with one idea. Patience is not waiting. Patience is choosing the right moment. Most traders jump early because they rely on instinct instead of structure. They trust the spike instead of the setup. They follow hype instead of data. But when you trade strategically, your mind works differently. You wait for confirmation. You define your entry triggers. You accept missed trades as part of the process. You trade the plan, not the emotion. Your rules become your safety net. Your routine becomes your anchor. Your structure becomes your edge. The market tries to pressure you into reacting, but your strategic framework stops that pressure from turning into mistakes. When you know exactly what qualifies as a valid setup, your brain stops chasing uncertainty and focuses on logic. Here's the real advantage. Strategic traders don't need perfect predictions. They only need repeatable processes, and processes beat emotions every single time. You're no longer guessing. You're executing. You're no longer chasing. You're filtering. You're no longer reacting. You're commanding. If you're ready to trade with strategy, structure, and confidence, subscribe to The Trader's Mindset. This channel teaches you the mental edge that charts alone never will. Now that your mindset is shifting into strategy mode, let's talk about the discipline systems that keep FOMO from ever creeping back in. You can learn strategies, master setups, and understand psychology. But without discipline, FOMO always returns through the cracks. Discipline isn't about being strict or forcing yourself to behave perfectly. Discipline is structure. It's identity. It's the invisible framework that protects you from emotional decisions before they happen. Most traders think discipline means don't chase or stick to your plan, but those are outcomes, not tools. Real discipline is built through daily habits, the small actions that shape your mindset long before you hit the buy button. Start with your pre-market routine. When you prepare before the session, your brain moves into structured mode. Review your setups, revisit your rules. Look at clean examples of the trades you actually want to take. This primes your mind to filter chaos and focus only on valid conditions. Next, use a checklist, one of the most underrated anti-FOMO tools. A checklist slows your mind down. It forces your brain to evaluate, not react. When you tick through confirmations one by one, the urgency disappears. Then comes journaling. Writing down your reasoning before entering a trade creates accountability. You stop entering because it's moving, and start entering because it meets criteria. And finally, use post-trade review. This is where discipline grows roots. When you study your impulsive entries, you develop awareness. When you study your best trades, you reinforce repetition. Over time, these routines turn emotional impulses into structured behavior. The market becomes less threatening, less urgent, less chaotic, and you become someone who trades from consistency, not excitement. Now that your discipline system is in place, let's step into the highest level of trading psychology, the confidence that dissolves FOMO completely. There comes a point in a trader's journey where emotions no longer control the outcome, because the trader has learned to control the emotions. This is the phase where FOMO stops being a threat, not because the market becomes easier, but because you become stronger. Confidence in trading isn't loud, it's not aggressive, it's not about predicting every move. Real confidence is quiet, steady, and grounded. It's the ability to sit out a move without feeling pressure, to wait for your setup without feeling left behind, to watch a candle explode and still feel nothing but presence and clarity. This is the psychological level where your brain stops reacting to noise. where urgency becomes irrelevant, where hype loses its power, where patience becomes natural. Confident traders don't chase because they no longer fear missing out. They know the market will give opportunities again. They know discipline outperforms excitement. They know their edge comes from execution, not emotion. And with confidence comes consistency. Your decisions stop fluctuating with every spike. Your expectations become realistic. Your risk becomes controlled. Your trades become stable. You start trading from identity, not impulse. I am a disciplined trader. I wait for confirmation. I don't chase. This identity shift becomes your shield. It blocks FOMO before it enters. It keeps your mind calm, your actions intentional, your process repeatable. This is where emotional mastery becomes natural. Not forced, not practiced, built. Now let's bring everything together, your awareness, your discipline, your confidence, into a final roadmap that eliminates FOMO for good. There's a moment in every trader's journey when everything clicks. Not because the market becomes easier, but because the trader finally learns how to face themselves. And if you've made it to this point, you're standing at that moment right now. Across this roadmap, you didn't just learn the 5 big FOMO mistakes. You dismantled them. You didn't just identify your emotional triggers. You took back control from them. And now, you're no longer trading as the old version of yourself. You're trading as someone who knows better, someone who waits longer, someone who thinks deeper, someone who no longer lets panic make decisions on their behalf. This is your new identity, a patient, confident, self-disciplined trader who understands that the market doesn't reward urgency. It rewards clarity. Every step you take from here, every chart you open, every candle you watch, your mindset will decide the outcome long before your strategy does. You now know what most traders never learn. FOMO isn't a trading problem. It's a psychological pattern. And patterns can be broken. You've proven that. So as you move forward, remind yourself, you're not here to chase. You're not here to react. You're here to execute. You're here to evolve. You're here to trade from strength, not fear. If you're committed to becoming the version of yourself who trades with mastery, not emotion, make sure you subscribe to the trader's mindset. Your journey doesn't end here. It starts here. And now, let the charts reflect the trader you've become, not the emotions you've defeated.